What up? What up? It's December 22nd, 2023, about to close out the year. This is third week of finding your way, I think. Anyways, this week we're gonna jump into game planning. How do you come up with the game plan? Um, how do you build a game plan around your strategy? One of the biggest things to setting up your game plan is actually knowing what the strategy is. We all jump in different chat rooms, different trading rooms, and each of them will have a different strategy, whether it's support resistance, supply and demand, standard dev, fair value gap, price action, moving average, fib. They all have different criterias and they all have different rules. But, and that's one of the main reasons why we dumb down your strategy. Like, let's figure out what the core principles of your
All
strategy.
right, all right, all right. Wait. 13 points. We cover now. I'll cover.
We have to figure out what the core principles of your strategy are so we can figure out the core rules of your game plan and your strategy.
Just covered 13 points here.
Once we once we figure out the core and the main rules of your strategy, the other rules that we'll create for your strategy will be adaptable. But the core fundamental rules will most likely always stay the same, like the confirmation. What does the confirmation on your strategy look like? And each one will be different. The moving average system, it will be a confirmation of a specific moving average. A fair value gap will be a confirmation of a fair value gap. A standard dev will be the break above or break below that level, the standard dev level, and then come back to confirm that level. But one of the biggest things that new traders get in trouble with is not waiting for that confirmation. For example, let's just use the fair value gap confirmation right here. Yeah, this is data. So this is not normal price action. So this is a big data candle. But the confirmation of the fair value gap was created right here, this green zone. So the confirmation would be over here. But don't get in just because if I got in on the confirmation of this, like if I had just put a fishing order out on that fair value gap, I would have got stopped out. Because on my first trade, usually my stop is a tick below that fair value gap if I'm using that strategy. If I had a cushion, then my stop loss would be one tick or two ticks below the previous structure, depending on your tolerance. And that's one of the major components of your game plan. What is your risk tolerance? You need to clearly line out your risk tolerance, your goals and your risk tolerance. Are you looking for short-term gains or long-term growth or income generation or some of the things? And a lot of people, I wouldn't even say income generation. I would just plan on being profitable. Don't think about, oh, I'm gonna make $600 a day or $500 a day. That is my ultimate goal, is to get you guys up to averaging $500 per trade. But right now, let's not focus on the money. Let's focus on your strategy. One of the biggest things is over leveraging yourself. If you're over leveraging yourself, you're not gonna give your trade or your strategy room to breathe and to actually play out. If you're trading ES when you should actually be trading MES, and just jump over to MES. Like I always say, the money will flow when your strategy is consistent. You want to focus on consistency. You don't want to focus on hitting, um, hitting green, and then you got one big red. You hit small little greens, and then you get one big red. You don't want to do that. You don't want to get in that habit. You want to create good habits. That's one of the major things that trading in the zone teaches you. Teaches you to create good habits, good routine, and look at the good patterns. Don't look at shitty patterns trying to force a trade that you shouldn't even be trading. The most you should be trading in one day in futures is 4 max, possibly 5 trades. And if you only have one strategy, then you're most likely only going to trade maybe 2 to 3 times. Just accept the fact that there's not going to be a trade every 30 minutes or every hour. There's not going to be a setup. Easy. He's learned that, and he's learned to stay away from the market. If it's not a short day or if there's no place, he'll glance at the market, and we'll let him know. We'll alert him like, hey, easy, your grade A is setting up, and he'll go glance at it. And if we, because no matter what strategy, let's say we're all using Brandon's profile, point of control, volume profile strategy. We're all have different eyes. We all have different brains. We're all going to look at that same strategy a different way. And that's why you need to get the core fundamentals, because the core fundamentals will always be the same. You want to get those down nailed, packed, so you can concentrate on other aspects of your strategy. Once you have the core strategy or core principles of your strategy down, then we can focus on adding more indicators or adding more information to the chart. So yeah, Dell. Do you have a screenshot of your fair value gap or Luna or Kelsey?
Yeah, I have a screenshot.
You want to share your
Most of
screen?
the trades that I've taken, I think I put on the chat, but let me open it up.
I'm not using the fair value gap. You told me to just use for now
Yep.
the cross.
Yeah, no. You're a different strategy, so we'll focus on your strategy. But if you remember I told you guys take a picture perfect screenshot of what your optimal trade should look like, and did it
Yeah, I
play
have
out?
that.
And did it play out? If it didn't, there's going to be times, exceptions where it doesn't play out. But your grade A, we need to figure out what your grade A setup is compared to a regular setup. Because you're not going to take every setup, even though, like right here, oops. Right here, there's a fair value gap. Is that your grade A setup? It could be. Or is this your grade A setup? Or is this your grade A setup that didn't work out?
And one more thing, with the screenshots, if you can take a screenshot of your ideal setup, that would be helpful to the group too, because at the start of every class or at the start of your, the focus on you in the class, you can show everybody like what your setup is like ideally going to look like, and that'll make it easier for us to follow along, and also like see how your progress is going, and most importantly, learn from what you're going through.
Yep.
I took some shots of the setup, but my focus was to learn when to take it, like to get used to the cross and then wait for the confirmation.
Yep.
Which happened, and sometimes it plays well, sometimes it didn't. So this is where I need to learn this next step where, okay, I should not have taken this because the EMA was pointing up, for example, or something happening. So this is where you need to add the next step to iron the trade.
We'll add the next step, but we need to concentrate on creating rules for you to follow for the next step to play out. Know what I'm saying?
Exactly. Yep.
And then we're gonna fine tune the next step, and then we're gonna fine tune that once we got that lasered in. Cause I've seen a lot of problems with your guys' entries. You guys were entering on this side of the trade instead of on this side of the trade. You know, you guys were entering up here when you guys should have been waiting for the pullback. See, because if you entered here, right? Let's just avoid this red candle right here. Or, right. Let's just say you entered here on the wrong side and you didn't wait for the pullback. Your pullback was way down here where you could have entered here to get in on this side to go up. But this is not a good example because this is kind of trending down, right? So on this whole trade right here, getting in on this side of the trade is not good. Getting in on this side of the trade is better because you're going with the wave. Kelsey, you might be able to relate to this. This is like getting into the surf a little bit too early and the wave is gonna crash on top of you, right? Over
And then
here,
you hit the reef and you got a cut in your leg.
yeah, exactly. This is what happens right here. You get a cut and then you're fucked. But if you get it on this side, yeah, you're getting in at the bottom, but this is like you're getting in right when the wave is forming, right? So you're forming, and you're going with the wave. You're riding the wave. And now you know that it's gonna, it's gonna crest and crash on the beach. So you stop out or you get out right here before it crashes on the beach, so you don't have to swim all the way back. So for you that are long players, you always want to wait for the, like, let's say you're getting FOMO and you're getting right here. And you get up a couple of green and then it starts going against you. You're like, fuck. And then you're stopped out. But if you would have just waited for that confirmational pullback, and one of the biggest things, you guys always ask me, well, how do I know the next candle is not going to be red? It's called the two-legged pullback entry. A two-legged pullback entry. Here's a good example right here. There's two entries you can take in these areas on the confirmational pullback areas where your entry would not even come, I mean, the price action would not even come close to your stop loss. And the cleaner, take this note, the cleaner the leg is, the higher probability of your play playing out. So this is kind of choppy. So I don't really like that. This is more cleaner. See how it kind of slopes down and then goes up? That's what you want to see. You don't want to see this sideways shit right here. Maybe there's a better example. We probably go to ES. Probably a better example. Too flat. Okay, like right here. So Kelsey and Luna, this is what I look for, right? So I wait for the pullback confirmation. You could have got in right here at the 10. That's easy grade B setup. Grade B setup because it got in, it pulled back. It pulled back to the 10 SMA. It held the 10 SMA. So what I do is I wait for if I'm going long, I wait for the swing low or pullback low. They're called the same thing. I call it a pullback low. I call it a pullback low because it pulls back and this creates the low. So identify that candle, identify the pullback low candle. And then I get in one tick, a break above that body. This one will show it better. And then I put the stop loss right here. 2 ticks below, whatever you can tolerate. And this is what you guys got to figure out, is whatever your account balance is going to be when you guys start, is if I get in right here, can I handle right here, or can I handle right here, or can I handle it way down here? The first trade of the day, you should probably have a tighter stop loss, and as you build your cushion, maybe stretch it out a little bit more. But the key point is you want to identify that pullback low with confirmation. So you have the pullback low right here. You have the 10 SMA confirming right here. And then you have the body. You have the body right there. So now you're just waiting on this candle. You don't want it to break below here. If it breaks that, then I would avoid that candle. Like if this had a wick, it came down and it went back up, then I wouldn't enter right here. Why? Because it's the first higher low, from coming down and basing. It's the first higher low. So there is a chance that it can go like this and then go like that. But remember I said the cleaner the leg is, the better the entry is going to be. So this leg right here is I would consider it a second leg, even though it's kind of choppy going up. It's beautiful pullback low right here, even though you have this wick. But it held the 50 SMA. And the reason why I call this one is because it had the confirmation. This is the pullback low, but this was the one that had the confirmation because it held above it. So this one closes. This one opens right here. Right? This is live action. This is the way that I'm looking at it. So it opens right here. And it bumps the 50 and it keeps going up. Once it breaks above the body right here, and look, there's even a doji right there. So I know once it breaks above the doji or the body of this pullback low, you get in one tick above the body. Because look, now you're riding the wave up. You're riding the wave up. And you can lock in 5, 10 points or whatever you think it is. Go up here, lock in 3 to 4 points. You see this doji right here form. As long as it holds that body, as long as this one holds that body of the doji, you're in. And you can just ride it to whatever level. But you want to identify that pullback low. And then on the other direction, if you're a short player, like right here, you want to identify the pullback high or the swing high, right? Because you always want to get in on the right side. Remember, on the right side, literally on the right side. Because look,
Okay.
if
I
price action is going
I
up,
have a question for you, Sempre, but finish
Go for
what
it.
you're saying.
See how this is on the left side of price action, right? This is left side, left side. You want to get in on the right side, this side over here. Whether you're going up or down, you always want to get in on the right side of price action. See, because this is the left side, here's the right side, right? If you're going down, this is the left side right here. You wait for the pullback high, and then you get in on the right side to go down.
Yeah, exactly there. So that pullback high that you just identified, the last one,
This
you
one?
see that candle right prior, there's that red candle that got
this one?
sucked in. Yeah, this one. I usually tend to get in on that candle, but at the same time, you see that I'm guessing the pullback high wasn't done because it just kept going up.
Yeah, right here.
But yeah, but that candle that I usually get in, it's because first of all, yes, it's a red candle. It's the fact that it was a huge green candle and then it got sucked up, but the reverse of your sucked up action, whatever you
Yep.
call it.
Yep.
So yeah, I usually get in on that candle because that's where I see sellers, pushing in.
Mm-hmm.
So I would short on that candle, and then unfortunately, if I follow my rules, I would have gotten stopped out on the second green candle. And then after that, price action went my way. So stupid.
Yeah, but look at this little consolidation though, right? I would count these four, this one, these little four as your consolidation zone, right? So if you come down right here, you got these little 4 bars, right?
Mm-hmm.
So look, there's a big seller. Sellers on this candle right here. See how there's
Yeah.
a big selling pressure? The
Yeah.
volume tells you that the selling pressure is good or it's strong. The
Mhm.
volume will tell you it's strong because look, there's a volume beat. And these next two right here, even this one, even this big green one, even
Yeah,
this
it's
big
not
green one,
it's not buyer beat.
it's not a buyer beat, Look.
Okay.
right? And then the next candle, compare this candle to this one, the wicks are almost the same,
Mm-hmm.
right? But the green body is bigger than this one.
Correct.
So logically, you would think that this volume bar should be bigger. It should be like that big.
Mm-hmm.
And it's not. It's not that big. So you already think sellers are in control. I don't have my RSI, but RSI would have hit the 50 right there. Right here. Let me put a line right there real quick. Hold on. Just so we can solidify it. Was that fib right?
Yeah.
Was that fib right there right now? I'll clean it up. Anyways. So you look at right here where you get in, look at RSI. Where is it at? It's below. Okay. It's red. TTM's red. Right? Because you got in on that red candle.
Yeah.
You should
Okay, I guess.
you should feel confident,
Mm-hmm.
especially as MACD
MACD's bearish.
is kind of bearish and it's spreading apart, and then it crosses a 0 line. So on MACD, to me, there's 2 bearish signals, right? Here's my first bearish signal, the
Yeah,
cross,
you got the cross.
that cross, and then there's this bearish cross, where both lines go below the 0.
Okay.
So those are 2 bearish signs to me.
Hmm.
And then you would get in, so you're already, you say you get in right here, you should put your tick, maybe adjust your stop loss 2 ticks above, if you can tolerate that, up to
Mhm.
here.
Yeah, okay.
Because the
Or
way
up to
that I
that,
see it
yeah,
is
that
this
big green
doji.
candle. Mm-hmm.
I would put that doji as a level. That
Yeah,
would
that
be
would
my,
have been my stop loss out there. But
My
I mean,
s-
I wasn't looking at the doji, but more like that big red candle. That big red candle to me would be my stop. If it goes above it, I get out.
yeah, which is pretty much the doji level right there. Like if it breaks above, you know it's probably gonna go like this, boom, and go up. But your question was, what
My
was your
question was, I
again?
get in on that red candle just because I see a selling pressure, and then I see a big, it's like, it was usually a green candle that turned out to be a red candle. So sellers step in right there. So I usually get in that candle. That's what I'm trying to say. But like sometime I'm iffy, I would have gotten out on the second green candle. So like I panic hand or something. I have paper hands. There you go. I would paper hand on it.
Yeah, but what you should do is wait for this candle to finish closing.
Okay.
I know you want to anticipate the 1050 cross right here,
Mm-hmm.
but that's your grade B or grade C, right?
That's my grade C on this one. Yeah. And
Yeah, so
spading
it's
is
your
grade
grade
C.
C. So
Mhm.
you already know you have like a 50% chance of it playing out. Instead of your grade B, which probably has 75, your grade A probably has 80 to 90% success rate.
Mhm.
So you already know that the odds are a little bit less in your favor, but that's when you gotta start looking and being patient for your setup to, because remember I told you I use a 50-50 cross. Look, here's a 50-50 cross. You got a small play. I would have played it to the 100 EMA. But this is where you gotta see the candles develop. Are they getting sucked up? Okay, then maybe I should close a little bit right here. This all comes with screen time and experience. You'll start
Yeah.
to see the candles develop, and when you see them wait, like if you would have waited for this to close, this one would have popped green. I mean, it went down a little bit, so you might have got in right here,
Yeah.
but your stop loss should have been 1 or 2 ticks
Above
above
that.
that
Correct.
one.
Oh, okay. Yeah.
So you might have got hit, but the next time, maybe put it a tick or two above that. And then get it, you would be able
Yeah.
to tolerate that pullback.
Got it.
But just pay attention to the 10 SMA, because the 10 SMA the whole time was just down like this. Down.
Okay.
I
Yeah.
would be more scared to get in over here at the break of the 10 over here, because the 10 was more flat. And that's why, see how the 10 kind of guides you? It goes steep, right? So it probably had momentum, and then the buyers started getting in over here because the 10 SMA went flat, and then it started holding it started right here, it started to slope back up. And then it broke it, and then it held the 10.
Yeah. Okay. C'est bon. All right, but yeah, okay. So lesson to take out of it is, like I said, that candle that I used to get in is wait for it to close. Once it closed, the next candle that breaks it, that's my entry.
Mm-hmm. Just
Got
wait
it.
a little bit to close, and then mess around with your stop.
Yeah.
Because if you see this one, it gets down and then gets sucked back up, maybe you won't get in. Maybe you'll wait and be like, oh, maybe there's another pullback high. And then you gotta start looking. Where could the pullback high be like created? The creation would probably be right here at this doji. That doji is resistance.
Or
So
where could it line up?
so the pullback, yeah, exactly. Where can it line up? It's previous. This is not the best structure because it's just one doji. You kind of want to see like this right here. You want to see a structure. You want to see two or three candles right here for that to be like considered strong structure. But there is a possibility if you draw a line right here on this one, they'll line up with all these other dojis over here. See how I held it? I held this doji, I held that doji, and then it created one. So that's your level. Okay, where can it create the pullback high? That's the maximum you want it to pull back high. If it goes and breaks above that blue line, then just wait. Wait for your prime setup, because if it breaks above that line, who's not to say that it's gonna break above right here, come back, confirm, and then start doing that.
Yeah.
So
Like it's been doing the past 2 months. Yeah.
identify these doji levels. They're strong points. And look at even later, look at it was resistance over here. That was strong resistance. But just waiting, be like, okay, if I get in right here, can I add more if it goes up to this level? Or should I just stop out? But you wouldn't add on this candle, you would add, over here on this side.
Yeah. I mean, yeah, that's like the lower high. Yeah, that's a lower high setup.
Yeah,
So
because
it's
there's
doing
still a
low.
lower high right here. It's
Yeah.
a lower high than that.
Yeah.
Here's another lower high. So
Yeah, I usually use that as like let's say I already close a position. Like I said, I'm trying to play with only one contract, so I close the position, and then on the lower high, this is when I'll enter again and keep going down.
So trend lines are some of the things that might help you. Oops, that might help you too. Is okay. Do I see a trend line? Okay, I see that trend line. I mean, you could do the wicks. If you really want to, but you won't get that much. I try to get them as many contacts.
Yeah. Yeah, I used to do trend lines. I rarely do them, but whenever I do them, I find they work perfectly. I'm like, fuck, I should do them more often.
They do, and
Yeah.
I stray away and I come back. It's like fuck, the trend line would have helped.
Yeah, I know. That's the worst part. I always say it, but thing is, you need a second, like you need that second pullback high, right? Or that second lower high in order to do the trend line.
Yeah, you need this one right here.
Yeah.
But at least, like if you're in a trade right here, if you're in a trade, say you got in where you got in, right? So say you got in over here, you won't stop out until a hard open close above that trend line. So a
Yeah.
candle hard open close right here, like that, or whatever. You're not getting out. And then right here, it breaks above it. You're like, oh shit, it's time for me to take profits because it might pop against me.
Mm-hmm.
Good question.
All right.
So we've already defined your guys' strategies. So if you guys have a screenshot, I can try to help you guys develop your game plan or your your trading rules. And remember, these rules are not going to be like a definitive in concrete rule. It's going to be. LunaTheCat, do you still have?
But my document with my narrative and rules.
Yeah.
Yeah, I totally have that. I might have pinned it. I know I put it in the futures chat, but I actually don't think I
Yeah,
pinned.
I got them right here.
Oh, you got it? All right, yeah.
They're pinned.
All right, right on. Yeah, you guys, like if you want to actually not like if you want, like I think it would really be helpful. So I encourage you to do it is look at the my pinned documents up there. I don't know how many there are. Let me see. It might just be one. Yeah, rules and narrative. It's the top one, which is not to
Yep.
say it's the most important, but yeah. Oh, there we go. So that's what it is. It's like it's a reminder of what my rules are for. That's the first little paragraph chunk. And then it shows what I do in pre-market. This is mostly stuff I learned from Semper and from, the elite strategy, by the way. This was, I created this when I was doing Finding Your Way with Semper last, what you call it, spring. So, we got the pre-market stuff. And then about halfway through the first column where it says, was there a big dump? That's the beginning of the narrative. These are the questions I ask myself, and the little multicolored bullet points, those are the answers that I look for in order to move on to the next question. You know what I'm saying? And like, this is all stuff that you can say to yourself out loud. And you'll notice, like, as you run through this, I often repeat, this is at the bottom of the first column, for example, what do I see? What would I like to see? That's the conversation, all right? This whole thing is conversation. All these rules are not rules written out as statements, they are questions. You'll see, was there a big dump? That's a question. And is there proper MA stacking? That's a question. It gives you the two options. And a little note about on the bottom, next question, how do MAs look? It's a conversation you have also to keep your mindset being positive instead of like going into doubt. It's positive. What am I looking for that makes this positive? Second column, more questions. Then what do I see? What would I like to see? What does RSI look like? With the bullet points with different options. Moving down that second column comes a very important question towards the bottom, because this is the question I get to when I see my moves start to like possibly be setting up. Is price action recognizable and replicable? What that means is like you would not trade price action that was outside your system. At this point in the narrative, you got to ask yourself, is this strategy that I've outlined for myself, Is that what it looks like? Is this a setup that if I see it again, will I be able to repeat it based on what I just went through? Is it recognizable and replicable? Because that's what a strategy is. It's what a system is. It's something you can play consistently. You must be able to identify it. I used to think to myself, well, how come good traders like Semper know when something's going to happen? Like, how do they know that it's going to set up like this? And they don't, but they know what they like. That's the whole thing. That was a light bulb moment for me. Good traders don't know what it's going to do. They wait for it to do what they want to see it do, because that's how the thing sets up for your system. And so that's what this is, you know. And then in the third column, it's like the last little bit of confirmation, and it shows that I do my little entry, you know. Well, that's funny. It says second leg entry or second leg entry. It should say first leg entry or second leg entry. Anyway, that was a ramble on, but I really wanted to explain this. You know, so there you go.
No, you added great points. And this is a conversation you should be having with yourself. And this is the reason why I told LunaTheCat, don't write rules as statements. Write them as questions, so you can narrate the screen. You can narrate the chart in front of you. And you want to design the rules or the questions before the play happens, right? Because you're training yourself. You're training yourself to see the chart the way you want to see the chart, and avoid. Remember, I always say, the cleaner the leg, the more likelihood of the next leg playing in your favor. Well, like easy, when it's all muddy and choppy, or it's a long force up day, he'll stay out, because he's already trained himself. If it's a force up or if it's just a long day, that he's either going to stay away or look for a grade A setup in a counter trend play where he can catch 4 to 6 points, where he normally, when he's trading with the trend, he would catch 10, 14, 15 points. And you want to ask yourself, what, and this is why I instructed you guys to take a picture perfect setup.
Oh yeah, baby, NQ is going down.
Of your strategy. You don't want to, you want to see what happens before your grade A setup sets up. And you want to be able to talk your way through. Just like Brandon, when he sees candles, he said, oh, this is a force up or this is a scam candle. Right away, he can identify, oh, the indicators are not working. So he can adapt to what the price action and what the chart is telling them. If you don't know what your pattern should look like, or what your setup or strategy should look like picture perfect. And I know it's not going to be the same way all the time, but if you can identify what it should look like before it sets up, then you're going to start to pick up these candle development patterns a lot easier for you to set up. So for like Dell, what is your strategy? Is fair value gap, right? It comes up and then it pulls back down, and then you get in.
Correct. That's the like grade A setup. Actually, I think it was Tuesday. With the wicks and everything, you know, I've been trying to work on looking prior to see, like you said, where the setup may end up happening. And I think on the 19th, I took screenshots of doing it and it getting prior to the fair value gap. So
This one?
Is that the 18th?
The 19th?
The 19th, I'm sorry, yeah. So on that play, actually, yeah. If you go actually at the bottom, because I wanted to, I did take the screenshot. I actually go back up. right there, this last wick right here, if you make that bigger. Those two wicks, there was a wick right here that I saw. No, actually where the blue triangle is,
Yeah,
right here. Yeah, it was like a up and down wick with no body.
Yep.
So I drew the line there and I noticed, right, like you said, everything was just bouncing off of it. So I was like, okay, let's see what ends up happening if it bounces again. If it goes over, because I was looking for a long, if it goes over, let's see how it plays out because I was still looking for the fair value. And that's what ended up happening. That the red body actually stopped on top of it, right? If you go right there, yep, it stopped on top of it. So I was like, okay, let's see what happens with the next candle if it breaks below, and which it didn't. So I'm like, okay, this looks like, and when I saw the way the candle was, I was like, this looks like an actual fair value gap.
Mm-hmm.
And if you go up ahead, I mean to the next pictures up top actually, because this was like everything as it's going live, and then I took the screenshot after. So if you go back to the first screenshot, so when I drew that wick and I saw it, that's where I decided to get in at that candle.
Mm-hmm.
And as the play was going, because I already set my limits and everything like that, it was, when the play was actually going, if you go down to the other candles, I mean, the other screenshot,
That's what?
the third one right here. That's it. One more down, actually. Is it this one? There was one where actually the fair value gap actually came up prior to, let me look at my screenshots. Prior to me actually getting into the play.
Mm-hmm. And this is you playing the
The wick.
5 minute or the 1 minute?
This was 5 minute.
Okay.
I rarely look at the 1 minute unless there's like a lot of movement.
Mm-hmm.
I try to stay on the 5 minutes and above. So yeah. So
Yeah.
that actually, because there was one of them that actually came up with a fair value gap even prior to me getting into the trade. I mean, after I got into the trade, actually. Which one? It was the 20th. I apologize. It was the 20th. But this was the question where I asked you, on that wick, was it a proper wick? And you
Which
said I
wick?
didn't have this. The one prior, that's when I sent you a message. I was like, hey, what do you think about the wick? And you said I didn't have the actual image in it.
Oh yeah.
So, and then so you didn't get back to me. So the next day I tried the same strategy again, looking for wicks prior. And if you, like I said, where is the screenshot at? The first screenshot, if you actually look on the 20th, I saw two wicks that I created a box on top of it. Is that the 20th?
This one.
Yep, that's the one.
Hold on 1 sec.
Yep, that's the one where they had the double wicks.
Right here.
Yep. So I saw the double wicks. I drew the line, like you said, tried to just draw the line and see how the action plays out.
Mm-hmm.
So everything was hovering over it. So I just waited. And actually, at that point, the next image, it passed the wick and it started being more resistance. So I said, okay, no problem. Let's just wait to see what ends up happening. And then I saw that trend that it bounced off, and I actually waited for it to break above those wicks, which gave that green candle. Right when it did that, I waited for the actual pullback, and when I waited for the pullback to get in, that's when the actual fair value gap showed up. So if you go down more to one more, that's when I got in the trade prior, but that's when the fair value gap actually showed up. So I actually read the fair value gap prior to it.
Mm-hmm.
And it was actually good being able to see it prior to it forming. Like I said, right when it pulled back, that's why I've decided to get my entry. and I was able to close. I picked up 2 contracts, and I was able to close one to 3 points and the other one at the 5 points.
Nice.
Now,
So now, go ahead.
no, and the other question that you mentioned that I do have is when you see a strategy, like you said, it plays out. I had one target at 3 and the other one for 5.
Uh-huh.
One target hit for the 3, but it didn't hit the 5, and it went back down, back to the fair value gap. Now, my question is like, is that like a reset for your play? Do you add more contracts depending on, because I didn't know how to, even though I did lose on the trade because it reached the bottom part of the fair value gap,
Uh-huh.
but that's still a question that I have. Like, okay, during that process, do I enter, and instead of trying to go for 5 points, if I entered one more contract, even though I closed one, should I close out if I have 2 contracts or 3 contracts and go for another 3 points? Or do I actually just wait for the 5 points?
That will come with experience, as I can't tell you stay in your trade. With the fair value gap strategy, a lot of the players, as soon as it hits their first target, they'll move their stop loss to break even.
Oh, okay.
That's what I've researched and looked at. Most of them, as soon as it hits their first target, which is usually 2R or 3R, which is 2 to 1 or 3 to 1.
Yeah.
They will move their other stop loss, or they'll move their stop loss to break even. If not, maybe a point above. But they can also get back in later. Instead of it being a red play, they will like just, pretty much pay commission for that second contract and reset and get in and wait for another play to play out.
Okay.
Because right here, the only way, like this play right here, the screenshot, once it breaks out, it'll probably go, see how there's a little doji right there?
Okay.
So, and what's this? Is this a moving average?
Which one? Yeah, that one.
The
That's
blue
that's the 100.
So look at how that doji kind of lines up with the 100. So right there, there's 2 different things that are stacking up together. Plus you got the big consolidation zone. That there's going to be resistance. So you want to see it slow down right here up top and maybe pull back slowly, not like a big red candle and you're like way over here. Then you wouldn't add there because you don't want to come down here, hit this line and then continue down, and you just made your situation worse where you went from green to red. But if you see price action coming down with small bars, small bars, small bars, and you see that level, okay, first wait for a candle to hit that level and see how it closes. If it closes below that line, then don't add, right? But if it tags that line and it wicks up and it creates a little hammer doji or some kind of doji, then maybe add on the next one. Over here, 1 tick above there for a possible play up. But honestly, I wouldn't concentrate on adding right now. Don't concentrate on that part of trading right now.
Okay.
Focus on your strategy, and if it works out, it works out. If it doesn't, then it doesn't. The only thing that I would do for you to improve is with this strategy, a lot of people will move their stop to break even once it hits their first target.
Okay.
So break even, so like that, you would have still got out green no matter what, and still been able to reset. Okay, yeah, it's, instead of $50, I only made $25, but hey, I'm green now. Let me reset. Let me take a breath reset, and let's see if another fair value gap will play out.
Got it. Okay.
But for now,
So-
I honestly wouldn't think about adding until you
Okay.
get until you get comfortable with this strategy. I've never added until I got my strategy laser. Like I would never add because when I first started out, I would do what you said. What you said.
Oh, hold on, because I can give you a little one coming in from school, so the dog's gonna go crazy, so I'm gonna mute for a
No
second.
worries. Yeah, when I was a beginner, and you know how Brandon, he'll add to average down, and then he'll get in, and then a big candle blows up, and then he's green. I would try to do that, and I would fucking go from a bad situation to a worse situation. And I don't want to teach you that right now. I just want to, after you got candle development and all that down, and your price action development on how it reacts to certain levels, then I would think about, okay, if it goes down to this level, then I'll add. If it does, because usually with this strategy, sometimes when I'm testing it out for you guys, is I'll get in, I have a fishing order out right here. When I see price action go up and then come down, I have a fishing order. And then I'll add right here in the middle. If it holds the middle, remember, I look for candles to close. I always wait for them to close, and then the next candle, I want it to be bullish. If it's going long, I want it to be bullish. I don't want it to be, a bearish candle, and I'm adding into a bearish candle when the next candle could be more bearish and just leap. And that's why I keep saying candle development, watch candle development. So for Dell, write some questions down as to how you like to see price action base, create a fair value gap, come back down, confirm the fair value gap, and then you get in whatever your criteria is, and then get in to go up. If it's volume, what does volume look like? I'm telling you right now, a lot of the strategies, Kelsey's standard dev and Luna's moving average strategy, MACD and RSI always look the same no matter what. With the fair value gap, I've applied it, but that's because I'm used to seeing these together. They look like a smiley face. Seeing them together. Like right here, right? It's base, hit this line, and look at the whole time. RSI was going up as price action was going down. Look at that. The whole time. And all of that, I got it to overcool. Way overcool. So these two things, even MACD, look at MACD creating higher lows the whole time. Even though as price action was still going down. Because you would figure that it would, see how it based right here and it based right here, you would figure it would base right there. But no, instead you see price action continue to go down, but look at the candles got way smaller, way smaller, way smaller. And then RSI and MACD both were going up. Even TTM.
Okay.
So integrate those into your strategy, all three of you guys. But you want to start with reading price action first and then move down, just like reading a book. So you got to move. I don't know if this play was like all this price action over here and it went down and then it came down and then it based. That's what you want to see. So Dell, you want to say, hey, I want price action to base. I want RSI, or you know how LunaTheCat narrated his play is, okay, first thing is, what do I want price action to look like? I want it to base. I want it to create higher lows. I want it to be structure for you, Dell. I want to see structure over here, right? Taken or not even taken, just I want structure over here because there's really no structure right here at all, other than these two little spots. I'd rather see like a little higher low or lower high, pull back, swing low, swing high. But you want to see, what do you want price action to look like? Is there divergence on RSI? Is there higher lows on, for going long? Is there higher lows on MACD? Is there a bullish cross? Remember the bullish cross, there's two of them. You got the average one right here, and then you got the zero line cross where, the line crosses at. And when it crosses this line, it's stronger than when this cross happens. But sometimes you get the MACD, RSI to cross. You always get the RSI to cross first. 2 to 3 bars, you get MACD. And then, and then your play will develop. So your moving average play, or your standard def play, or your fair value gap. And look at how long you had time to talk your way through this play, though, like for 30 minutes, maybe 40 minutes right here. So once it touches this, you're like, okay, I want it to hold that level before getting in. Okay, I want to see a fair value gap. Or even if you like Dell, if you see a doji right here and you're like, okay, if it gets there, there might be a big squeeze candle where it's going to create a fair value gap. The buyers are in control. They're probably going to come down, take profit around this area because the 100 and that area line up. That's going to cause a pullback to hopefully get it. But sometimes they'll just go and never look back.
Yeah, that's what ended up happening Thursday. Because it was already high during pre. So it was, since it was already high, and if I did see a fair value, I didn't even bother because I wasn't sure how high it was gonna go.
Yeah.
So
That's just where you just let it go. You don't enter, you don't get FOMO and be like, hey, I missed the train. But you take a screenshot and you identify what those big moves look like. Is there a consolidation zone like this? Is the MACD look like this? Does the RSI look like this? Or whatever the case. You got to identify what caused this big move. Same with the standard dev. Like if there was a standard dev right here, like, okay, it broke the standard dev +1 or the mean. Okay, so it's going to confirm. It could go all the way down here to this standard dev. But I want to see MACD look like this. So Kelsey, look how, let's just hypothetical, right? This is what you'll see. You'll see it break, and then you'll see it base and do this. And then this is where you got to start looking at MACD and be like, okay, it doesn't look like it's going to make it to the next standard deviation line. Because RSI showing strength, MACD showing strength. So I don't think it's gonna make it over here. Maybe I'll put a fishing order to get out right here if I'm going short.
Yes,
You know?
but how when I've watched, I've done enough, enough trades for a couple of years now. The MACD and the RSI seem to be, I mean, we all know they're lagging, but they seem to be lagging a little bit during live trading. They're just a little, I gotta wait and then wait and then wait. And then a lot of times I do wait for the confirmation. But I wish I had gotten in earlier. You know what I mean? It's like, yeah, I'm waiting for this confirmation because I don't want to lose money. And so I wait for the confirmation, and then I get in, but I could have made whatever, $100 more, $50 more.
They do lag, but look right here. Let's say your play to get in is at the 200 moving average, right? So you don't get in here because sometimes it fails the first tag. Boom.
Right. Right.
So then, but the whole time it's lagging.
Yeah.
It's lagging, right? It's
Yes.
lagging,
Yes.
but it's showing higher low.
Correct. No, that's a good point. Yeah. So I need to learn to use both of them. And you're right, pointing out that moving average that's there, especially the 200, right? That's a good one.
Yeah. Yep.
And then we can wait to see if, in other words, so I'm just making up a scenario. I'm waiting waiting for the drop below the 200 average. I could be looking at my other two indicators to see, well, what are they saying? And if they are lagging, but if let's say one of the candles actually went a full candle actually below the 200, right? Like that candle right there. Okay, it's below. That's real time. Even though the other indicators are lagging a bit, there's enough confirmation. Like you said, it's moving up. The RSI is moving up. The MACD almost crossed at the same place. I don't think it did, but it's close enough, right? So I have my 200 and almost cross and RSI. So everything says go. But I think I have not done that, to be honest. I have not used all of those three things at the same time during live trading.
Yep. But that's what I want to kind of help you develop. Okay. So right here, price action went steep down and then it slowed down. I want you guys to pay attention because you'll see price action every time before data, before PAL, before anything. You'll see it slow down. They're like one candle, a 1 minute candle will look like a 5-minute candle, or it'll look like it's taking 5 minutes for it to close. They'll slow down price action. So I want you guys to create a routine is look at price action. And this is why I wanted you guys to take a picture of your grade A setup. So you guys could, and you're never going to know your grade A setup until you take a picture and start. So like this week, this might be Dell's grade A setup, but next week, the grade A just became an A+, and that was even more of a picture perfect setup, right? So it's gonna evolve. At first, it's gonna look messy, choppy, but then the picture is gonna start getting clear and clear and clear. And this is why only looking at the pattern that you want to look at to get in is so helpful. Is so you're training your brain to be okay. This is the pattern that I like to see. This is or this is the pattern that I usually get burned on. Let me stay out of it. But you want to see price action and then it slows down. So you look at price action. Okay, I'm starting to see price action and I'm starting to see what I like to see. Okay, next step. What does the moving averages or your standard dev look like? Is it in the middle? Is it in the middle of the standard dev? Is it close to the standard dev? Or is it close to a fair value gap? Is it far from a fair value gap? Is it close to a moving average or is it far from a moving average? If it's close to a moving average, then or whatever it is, your standard dev, your fair value gap, if it's close to it, you want to see price action move slow. Okay, it's moving slow to my area, to my level. Okay, I'm right here, right? I'm right here at this level. I got everything. It tagged the 200. Now you got to get into the habit of looking for catalyst stacking. Okay, so you're gonna look at volume. That's why I have volume up here because I read it like a book. MACD and RSI don't really matter, but I usually have RSI above and then MACD. But whatever the case is, so you look at price action. How's it looking getting close to your level, right? Because you already got, okay, confirm my level. Okay, you want to look at the indicators. Kelsey, you know how you said they're lagging? You want to look at the indicators and you want to see them bullish if you're going to go long, right? Because it's not close to your level yet right there. It's getting close to your level. Let me see. So price action is getting close to your level. Okay, what does RSI look like? Okay, it's creating higher lows right here. Perfect. Cool. Okay, it's getting closer to my level. Okay, what am I seeing? Okay, MACD got the cross right here, bullish. All right, that's 2. Okay, hit my level. What did it look like? Oh, if volume's right here, let's just say volume's right here, whatever. Oh, I got a green volume beat. Perfect. So now, before it even touches your level, right? Or even if it confirms it a second or a third time, either way, I got 3 catalysts down here or 4 that say bullish, even though price action is still going down. So the 3 catalysts down here might outweigh the price action up here. Kind of see what I'm saying? So you look at price action. Is it close to my level? Yes. Check. Right? Or is it far from my level? Okay, then I'll wait. If it's far from my level, I'll just wait. Just wait. Okay, it's getting closer to my level. It's getting closer to my level. Okay, what does MACD look like? What does volume look like? What does RSI look? And this is only if you guys use this indicator. If you don't, then don't do it. But you gotta get in the habit of reading the chart like a book if you're using indicators. Read price action first, indicators second, whether it's the moving average, standard dev, or fair value gap. That second, this is first. And then all these other indicators, right? Well, you do have volume way down here. But because the way that Brandon always used to say, there isn't a play unless there's volume. And that's one of the main reasons why I have volume up here. Because that's the order of my operation. If you can look at price action, if you can look at price action up here and then jump to volume, okay, volume looks good. Okay, check. But RSI doesn't look okay, I'm gonna wait. Because usually, if you look at that, MACD lags RSI. Remember I say, you always get the bullish cross on RSI first, and then 2 to 3 bars later, you get the MACD cross. TTM, if you use TTM, sellers getting out of the way, right here. And then the volume. The volume is one major key component. So like Luna's gonna say, okay, is it close to, because with moving averages, you always wanna do whatever is relevant to that. You know, you're not gonna wait, price action's not gonna be up here and you're gonna say, okay, I'm not gonna get in until the 200. When you shouldn't even be thinking that far down, because whatever this level is could hold and go up. So you guys got it? So just get in the habit, okay, price action first, indicator second, MACD, or yeah, levels, whether it's standard dev, use my childish writing, FVG, or MA system, right? So price action first, PA, levels, any of these levels right here, and then all these levels third. So price action, and sometimes you guys have heard it, Brandon, and this is why I want you guys to develop price action reading first with no indicators other than your fair value gap, standard dev, or moving averages. Is Sometimes Brandon will say, oh, it's a crap day, indicators are not working, this and that. So the only two things that will work are price action and volume. So paying attention to candle development and volume. Those are two key components that will help you get in, get out, or stay in a trade. Oops.
Hey, Semper, I got a question.
Yeah, what's up?
When you're reading this volume, if you look at the candles versus the volume, how do you know when the volume is picking up? I mean, I see this red a little bit taller than the others before the big tall volumes,
Mhm.
but they're in line with the candles up top. Now, how do you read the volume increase to know that those big candles are coming?
There is one. Hold on a sec. So everybody, these rules are pinned on the futures chat. If you guys want to, Dell, Luna, and Kelsey, take these rules, write them or download them, and adjust them to your strategy. What you guys like to see, what you guys want to see, and narrate.
Yeah, and when it comes down to like making rules for like your actual strategies, like you don't have to have that many rules at like as many as I have on there for your strategy to work. But the reason why it's like I draw it out that much is because I do need to know how everything's working so I know what to look for. And also like so that I don't find any market information to be intimidating. That's from trading in the zone. Trading in the zone says you need to get yourself to a place where you don't see any market information as threatening. And that's just like one of the ways that I do that. So yeah, like Semper says, take that document, adapt it to your needs, and go for it.
Thank you, sir. Trying to see a good chart. So your question was, how do you know volume is picking up, right? Like in a certain play or
Or if you're looking at the volume bars are taller directly under the candles that were big.
Mhm.
So how do you see the volume increasing before that?
there are two. I kind of don't like Ninja Trader sometimes because of the volume.
And see, you're looking at to the left of all the tall volume bars.
Yeah, right here.
Yeah, right in that area. There's nothing there that I see that's going to indicate these big volume spikes. I don't see them gradually getting bigger.
You won't see it. It'll do the opposite. When you get squeeze levels like this. Oops. Let me see if I can find a good example. It'll do the opposite. When you see a squeeze about to happen, the handles will get sucked up. But you mainly want to see volume beats. Like, how can I explain it better? Hold on one sec. I had a tough time with my TOS, so I can show you better. Because one of the biggest things that you want to look for is the consolidation zone. First off, you don't want to take the big moves, right? The big moves, the volumes are obviously in there. But in order to indicate that a move is coming is you want to see a volume beat. Is this a volume beat? Hold on a sec. Ninja Trader does that justice. Hey, guys, there's one big thing about volume. Sometimes you'll get a red bar on Ninja Trader and you'll get a green bar on TOS. So be very careful. Let me see. Let me say TOS. But let me see if I can find a good example. I hate when I zoom in. Oh man, most. You guys got that issue? That shit just moves on you. Hold on one second. The only way you could visually see it happen without TOS. Hold on, let's see a question. It doesn't show that shit. Too zoomed in. I want to answer your question with a good screenshot. That's not being helpful. So here's a good example right here. See how TOS shows it a little better? But if I zoom in anymore, I might fuck shit up. Hold on. So take this consolidation zone. So it matches up right here, right before that thing. Right? So how do I know a big move is coming? Well, it holds a level, whatever level it is. And then in the volume, there's a volume beat in whatever direction you want. If I want it to go long, then obviously you want a bull candle. Even though there's a bunch of little reds, see how there's you would interpret that as, oh shit, sellers are taking control.
Yeah,
Right?
I see that one green candle in the middle,
Yep.
and that would tell me, I would look at that as, there's a volume picking up right there.
Yep.
That one there is pretty easy to see.
Yeah, and you will see, but for the big squeeze candle to happen is, see how it's like a geyser, or not a geyser. What are those, Kelsey? What are those things called? Blowholes, whatever, in Hawaii, where you go out to the rocks and the water gets sucked down, and then it'll squeeze up through the hole in the middle of the rock. Similar to that, if you guys get what I'm saying.
Yeah, kind of like the tsunami.
Yeah, tsunami. Yeah. So if you see the water getting sucked out to the ocean, right? The beach, you can see more sand. Then you're gonna see a big ass tsunami come, right? This is the same thing. So you got a buyer beat right here. You got that buyer beat right there. And then right before the move happens, you still got another little buyer beat. You'll see two volume bars half the size or more than half the size. Or it would be less than half the size, right? Because here's the average. There's an average. You got your volume B right here. Right before the big move, you'll see it get sucked down. 2 little bars. You want to see 2 little bars right before the big move. If you see it getting sucked down with the buyer beat or vice versa with the seller beat and you seeing it get sucked down, that means a big move is about to come in that direction. And usually it works better when the 2 bars before the big move are the same color. Sometimes you'll get one red and one green. If you want to go in that direction, obviously you want the bigger volume bar of the 2 to be green if it's going long and red if it's going short. Does that kind of answer your question?
Yeah, that's helping me.
What's that?
That's helping me. I'm gonna start looking for those volumes get sucked down before
Yep.
it jumps.
Yeah, it's like what I used to, how the way that I used to explain it is like a big FU. It's like a big old, holding the middle finger right there. So it'll get sucked down right here before it flips you off. That and just, if you have the, let me get rid of this annotation. If you have what is this, the volume study, it'll show you that the whole time there was buyers in control. Well, other than right here, there was both, but they got smoked. The sellers right here, see how half the bar is red? That means that the sellers got stopped out on that one. And that's one of the great, that's where you really see it the most. Is even right here. Right here, see how the buyer started taking control right here? The sellers started getting out of the way.
Yes, I do.
And then you get the 2 little bars and then. So if you have this, that's the way you can use it. You usually see it more better when it's not as choppy and it's clean. You'll see the red levels go down, or you'll see it going down. So you mean that, hey, and like right here shows all green, but see how right here the red is going down, the next bar is going lower, and then the next bar. So the buyers are taking control right there. So you
Right.
know it's gonna continue going. And over here in the consolidation zone, let's see what it looks like. The sellers are trying to take control, but there were so many buyers in that candle, in this candle, that it overpowered even right here. And this is what's caused that squeeze. Because the sellers were trying to take control, but there was no volume beats. If we started to see red volume beats, like even above this green one right here,
Yep, I see it.
if you started to see red volume beat above that, then this one would probably gone down instead of up. I know it's a little bit fucked up, but there were so many buyers here that overpowered all the sellers in this area. Why? Because it was a significant level right here. That it broke above the 666 and it just held. Buyers try to take it right there, and sellers try to take it right there, and they just bought it right back up, and then it held right there.
Yeah, there's a lot going on right there.
Yep.
There's,
See, so the sellers try to take control right on this candle right here. And you see it, look at, this is where you gotta correlate. This is another thing that will help you. Correlate the candle to the volume. Look at this. See this big red candle right here?
Yep.
Wouldn't you think that big red candle compared to this, look at even the wick, even this is a bearish engulfing. The wick to wick is way bigger than that. The body is double the size as that. But look at the volume. The volume doesn't add up, right? It doesn't
No.
make sense. You're like, what? Shouldn't this red volume bar be bigger than this green volume bar just by correlating the candles? And it should. But that's telling you right there, the buyers are gonna squeeze it up. Because I remember Lasagna Cat would be like, well, you know, how do you, he always used to, how do you know it's gonna squeeze? Well, the volume bar wouldn't correlate with the side that it should be going to. So right here, you should see red and you should see it break that 10 and then just continue going down. But you don't see that. You don't see the same size volume bar. It should have at least came up to almost the same size and it didn't. So those two things right there, reading volume alone have helped me tremendously. Is okay. If I see a big red bar or candle, I should see a pretty sizable red volume bar. And if I don't, okay, that's one signal. Okay, something's going on here. What happened right there in that red bar? Okay, the buyers right here are in control and these guys are trying to beat them out. So there's a tug of war right there. So then that should signal for you to start looking at other indicators to see if it'll give you a better picture as to what might happen. Hopefully that answers your question.
Yeah, that helps.
Yeah, keep asking them. You can ask me next week with the same question. And I might answer it differently. Or I might have a better screenshot for you to kind of put it all together. A great question. Thanks for asking. Any other questions?
No, I don't have any.
Semper, I sent you some of my trades. I don't know if you got them. Just
Yeah, hold on one sec.
back. You want to share it now or later on?
Yeah, right now. So you got in on this red candle, right?
I think on this one I used the NQ at the beginning. I forgot to change it.
Yeah.
So yeah, I got on the cross. All of them, all the trades I use are basically based on the 10 crossing the 50, and then confirming back the price action going back to the 10, right? Sorry, to the 50. So that's
So
basically what
where your 10 is this one? Your 10 is this one, right?
Yes, the white, yeah, is 10, and then the red is the 50.
Where's the red at? I'm sorry, I'm freaking
Red
colorblind.
is right beside the price. Where it says the price. Yeah, on the left side, that's your red right there.
Oh, right here.
Yeah.
See, for the grade A setup, see how you got in on this side? You didn't get the cross until over here. And not only that, but you're getting a bearish cross, not a bullish cross.
Yeah, it was a bearish cross.
So you should have. This is a long play, right? Yeah, because the box is green.
Yeah. Sorry,
So-
that was yeah. So it was the if you look on the left there, the cross was up. It's been choppy. So
Oh, right here?
no,
Oh,
at
right
the
here,
left side.
right here,
Yes,
right
you
here.
got it. Yeah. On the other slides, I put an arrow on the actual cross.
Yeah.
So make it easier.
So you got the cross right here.
Yeah.
Or right here. What's this? What's the bond?
Yeah, that's the
So
I removed that later on, the Bollinger. It was still there. The yellow is the Bollinger, so I removed that as well, so it will be cleaner.
Yeah.
So basically, the cross was there. I waited for the price to come down, so it went up.
Oh,
Then
and you
price
got it
came
right
back to,
here.
yeah, and then when it came down to the 50, sometimes I attach it to the 50, so I don't have to, babysit
Yep.
it or yeah.
Yeah. I don't recommend doing that right now, attaching it to the 50, because you're gonna get caught in something like this. Did you get stopped out on this, or were you green?
This one I got stopped out, I think.
Once you learn your strategy, more than likely, because these are big red candles going down. Look at big red,
Right.
small green. And this is where I was telling Dell is I wouldn't be adding to this. If it was coming down like it was right here, but going down, then I would probably have a fishing order out. And that's where you guys gotta get experience. And that's why I don't recommend it right out the gate using fishing orders. Is I want you guys to wait. Remember, one of the biggest thing is hit your level, wait for that candle to close. Sometimes there'll be times like data days where it'll go slow, go slow, go slow. And then data comes out, this candle will hit your level, bounce all the way up, and then market digests it, and then it'll keep going down. There's been that. And that's why beginners, I recommend that you wait for the level to be hit and wait for that candle. Wait for that candle to finish. So this one would have finished red. It would have prevented you from getting in the trade, because once it breaks that level, then that kind of voids that level.
Okay, so if it's a wick or something, it don't bother then. Just wait until it closes.
If it's a wick, like let's just say this candle was green like this, and it opened up on your level and it tagged it and it wicked down, right? If it wicks down, it doesn't matter. You want the body to close above that level.
Okay, so I wait for it to close, not take it while it's
Yeah,
coming down.
because you're getting in on the you're getting in on the left side. Remember, you want to get in on the right side.
Correct.
You always want to get in on the right side, not the left side. Because you don't know if it's gonna just go like this and then just flush.
Right.
But if it hits your level, even if it wicks below it, it doesn't matter. As long as the body, this is hard open close. As long as the body closes above that level and the next candle opens up above that level.
Okay. I was just taking blindly. So
No, that's fine. No, that's fine.
Perfect.
No, I want you guys to make mistakes, and this is why I want you guys to sim trade is make those mistakes now, so when you're live trading, you're not making these mistakes and you already have the good patterns in your head.
Yeah.
So right here, you would have waited. If you would have waited, you would have got in a better spot.
Yep.
Let me see what happens.
And here I'm not looking at MACDs. I'm not looking at anything. I'm just when it
No,
turns
that's fine.
you told me about the volume as well. So
Yep.
but I
No.
didn't understand the volume very much at that time. So now I'm understanding more the importance of the volume.
Yep.
So that big red should have told me, well, be careful.
Yeah, definitely. But this is just where screen time is gonna help you, and just paying attention to these little subtleties that here. I was just looking at volume as to why it went down. But anywho, so yeah, if you would have waited, it would have prevented you from even getting in the trade. Remember, you want to get that cross first. And you can wait for that price action and you want it to go slow and then you want that body, you want that level to hold. And I want it to look like this, but above your level over here. So you wait for that candle to close, right? Just pretend this is a 50 right here. Like that. And then you got the 10 right here, right? The 1050 cross over here, and it's going like that.
Yep.
So you want it to come down, hold your 50 SMA or whatever moving average you use, close, and then you want the next one to open above that level, and then wait. As soon as it breaks one tick above that level or breaks that level, whatever you feel comfortable with, then you get in. And then you would write it depending on how far the 10 is from the 50. Sometimes it's close, sometimes it's far. If it's far from your 50, then you might want to think about locking in some right there at the 10.
Okay. And if it's very close and almost touching.
If it's very close and very touching and it's already broken above it, then you're good.
Okay.
Then stop out, you got in right here. Then you might, if a price action comes back down over here, you either have your stop loss right here and either stop out or think about moving your stop out to break even.
So the ideal situation is that the price action moves above the 10?
Yeah, because you want it to keep going, because what happened is it'll catch the 10 and then it'll just keep bouncing off the 10. Boom. Boom.
Okay. And I take the trade after on the second candle when it passes the top
Yep.
action. I don't have to wait until it closes.
Nope.
Okay.
Nope.
Gotcha. Perfect.
But you'll see it like pay attention to volume. See, because right here, this is what I like Ninja Trader sometimes. It's because see how I finished white, but you got a bullish beat right there. Even though, because I wouldn't count that.
Okay.
But yeah, you want to hold your level. This goes for Kelsey and Dell. You want to hit your level. Well, Dell has a different fair value gap strategy. So his is like get in when it hits that level or at midpoint. But for Kelsey and Luna, you want to hit that level, hold that level, hard open close. Remember, hard open close is close above that level, open above that level.
Sometimes on that second one that closes, let's say the green, it basically fluctuates from goes above, then comes back down, and then goes back up. I don't need to try to catch it at a certain point. I just take it off the top red level, right?
What was that? I'm sorry.
So so let's say the first one closed, so the red one closed up above the level,
Yeah.
and then the next one green and goes above, but it fluctuates up and down. So it goes. Do I need to try to catch it at a certain level, or just keep it? Once it passes, just take it and leave it alone.
I would just take it and leave it.
Okay, all right. Because sometimes you try to take it when it comes a little bit lower, and then it's faster than you, and it just you miss it, right?
Yeah. You miss it, you just leave it. Wait for the next setup. You don't want to FOMO. You want to try to calm that shit down. Especially as a newbie, you already see it over here and you want to get in right here. And you're like, because of the next candle, right? Because let's just say that's a 10 and you get in right there. Let's say it holds below the 10 and then the next candle is red. and then it does this, and then you're
Yep.
fucked. You don't want to do that. You want to get in the closest possible to your level. Like these two big candles, I don't really like for entry. I rather them look like this, where they're small bodies.
I see.
But this is another pattern. Like this is a bullish engulfing. I don't know if the play out.
Not sure if I took the.
Oh, it did. Look,
Oh yeah.
where was this at? Hold on.
This was. Yeah. No.
9:30.
This is the one. This is the one. But just.
Yeah. You saw that bullish engulfing? So that was at 9:10, right? Over here at 9:10.
So if you look at where it stopped, it's in the middle of the screen. So this is where the bullish engulfing, I think. Right?
Yeah,
Oh,
right
no,
here.
this is no, sorry. The ones that we took pictures is beside the entry. So the top two, so they're beside the entry. So you've got.
That's a 1 minute. Is that what? Are these two different trades? Yeah. Oh yeah, because you got stopped out right here.
Oh yeah.
Yeah, so you got stopped out right here. Right here, and here that was that bullish engulfing right there. That bullish engulfing says up. But you're like, what? You're like, what? How can that mean up? And you just gotta wait. So bullish engulfing, right? Higher low or lower high. This is the inverted head and shoulders right here. Even though it's kind of wonky, head and shoulders right here, like this.
Okay.
I mean, even this candle would have stopped you out.
Absolutely. It's insane.
But what's this? Is this the 666 right here?
This is a 200, I think. It's the it's the 200.
So yeah, you stopped out right there.
Yeah, the 666 is the gray.
Yeah.
So it's above it. Yeah.
Where
that's
right
the one.
here? Right
Yes.
here, huh?
Yeah.
Yeah. So just wait. You want to get in on this side of the trade.
Gotcha.
And even then here, like, because you gotta think if this is a 10, that's your next. If it breaks a 50, this is gonna be the resistance right there. And there was resistance. Look, it was resistance there, and then price action broke above it, and then it started holding the 10, holding the 10. You see that?
But no matter how you play it, you're gonna lose over here because that
Yeah,
would have
because of
stopped
this. This is gonna stop you out.
Yeah, no matter what. Yeah.
But that was probably data. I'm pretty sure. At 10 a.m.
If you scroll down, it might tell you what time it is.
Yeah, because it's 10 o'clock, I believe.
Yeah, it's
Or 9:30.
9:30. Or 9:30 is
It's open, so it's not data, but it's open.
It's open.
That's
I wouldn't touch it.
open and data days are different beasts.
I wouldn't have traded if it was at 9:30. I just I wouldn't touch things at 9:30 because they move so fast, and you end up stopped out unless you have the direction it's gonna go. Then there's no point.
Yeah, and that comes with screen time and practice. But once it bases, this is another tip. Once it bases, you want to see seeing higher lows if you're getting in long. You want to see higher lows.
Okay.
So here's my first leg. Here's your second leg. And then let's just not even count this candle because it's open. So you identify the pullback low. I know it's this one because of the wick, but sometimes you can interpret the body as a pullback low too. So you could have got in right there.
Okay.
And wrote it up 5 to 6, 7 points, 8 points, whatever. And Q is different. So you'll be able to catch 10 points pretty freaking easy.
Yeah.
And it moves
Yeah.
super fast.
Hey, Semper, I gotta run into my next thing, but I'll send you the timestamps.
For sure, man. Have a good one.
All right,
Thank
thank
you
you
for
guys.
stopping by.
You got it.
Take
Take care.
So once it bases, you want to start seeing higher lows, hold.
Okay.
Usually that's why it's called a two-legged pullback. So the second higher low, this was Lasagna Cat's play, was the second higher low he would get in. He would get in it. So remember, you always want to identify the pullback low. Like this could be it because of the wick, but like I said, I identify the green as the pullback low and then get in one tick above, and then your stop would be right here.
Okay.
One or two ticks below this freaking low. Same thing over here. You wait for the candle, hit your level, hits right here, holds, right? If they got closed, hold. And then you gotta be right here. You get in right there. Like if this wasn't here, it would have played out. Because that's on even on NQ, that's a lot of points. That wick is almost 20 points just by
Yeah,
itself.
that's opening. So
Yeah.
that's why. Okay.
But on a this is why you want to take pictures because you want to get in on the right side. You always want to get in on the right side. You don't want to get in on the left side.
Okay.
So just take that into consideration next time.
The next one, I think it was 18. If you go down, you'll see the next one, the
All right.
19.
So you were gonna get in short on this one?
Yeah, I got
Yeah.
short on this one. It crossed, so I'm just showing the crossing over here,
Yep.
and
Perfect.
then I'm waiting
right
for the waited for the pullback on the red,
here. Yep.
which is
See the
the
cross.
50. Yeah. So the next screen will show you what happened.
Yeah.
So got stopped out as well. So
This is yes. And that blue line is a 200.
200.
See how you keep getting in on the left side of it?
Mhm.
So same thing, you gotta wait for that pullback. If you're getting in short, you wanna wait for that pullback high. Did it keep going? Is this the stop out?
Yes.
You got stopped out. So for short, you want to identify the pullback high, which it could have been. Like I said, I try to use the body, but sometimes it's a wick.
Yeah. No, again, at this level, I was just going blindly on the
No, that's
red.
fine.
Yeah. So
That's
just
fine.
but now what happened? You've got a signal for long, not for short,
Mhm.
because it
Yep.
crossed the. So this is where I was thinking, like okay, I should definitely get out of it, right?
Yep.
Well, I should
Yep.
have gotten in the first.
Yeah, you shouldn't have got in
Yeah.
right there because you had a
Yeah.
fishing order out. And
Right.
this is what I mean, like 10 is flat. The next level, like see how the 50 SMA is flat? If the 10 is flat and sloped up, and then you look up like 2 bars or it's trying to flatten out the next moving average, which is the 50, then you know it's probably gonna break through the 50.
Well, that trade will not happen in the future because, well,
Yeah.
hopefully,
Yeah.
because now I understand that I have to wait for it to close, and
Yep.
since it closed above, then I will not. And the next one went up, then this is not a short play. That's it. I'm done.
Yep.
Yeah.
Exactly. Next time, if you wait for the candle close, you will not even be in the trade.
Exactly. Okay. So that's
Yep.
one thing out of the way. Okay. So the next one, I think I took that cross probably. Let's take a look at the next one.
Did you send me another one?
Is it all of them, or
I think so.
is this trade 2? I think I did 4 that day. That
Let's,
yeah, that's the next trade. Yeah, go down. Yeah, that's the third.
So which one's the third? You entered over, no, that was your previous trade, right?
Yes, so the entry was on this one. You see that I used that cross on the left side,
Yep.
crossing
Oops.
the red as my
Yeah, see
as
right here,
my
it worked
signal.
out perfect.
Yeah. So here I actually entered after the cross on the left side. So the
Yep.
first,
After this cross.
yeah, after the stop up right away, I noticed it was going, so I used that as a signal to go.
Yep.
It took a while, but it ended up coming down, so I took it. And again, I did not take it because it went up. I just took it because it went to the
50.
to the 50.
Yep.
Yeah. But in this, I can see now it should be successful, and it did.
Yep. Because
It
this
did.
is the confirmation. See, it broke the 50. It hadn't tagged the 50 this whole time right here.
Right.
And then it slowed down. See how it slows down, slows down,
Yep.
slows down, slows down. And then you got in a little early at the 50, but if you would have waited for that, right? Either of these two candles, it don't matter.
Yeah.
If you would have waited for this red to finish closing, hit the 50, right? And if it breaks like that, you want the next candle to hold above, hold above. Remember,
Right.
close above, or open above, close above. If
Right.
it breaks below, you want the next one to open above and close above, and then you would have got in right here.
Gotcha. Yep. Definitely. Now
And
I
then
got
look
that
at,
one.
and then it worked out beautifully on that one.
I did. Yeah. Okay.
And that just goes to show that sometimes the play will not play, but the more patient you are with your play, the more the odds are going to be stacked in your favor.
Yes. Yes. Absolutely. Volume wise, can we check if there's anything that I should be looking at for the volume, or don't worry about the volume now?
Oops. Hold on. Yeah, this one's showing. Oh,
I know it's hard. Maybe you should make it smaller to be able to see.
yeah. Oops. See, because I always count the consolidation zone, nothing else. So we'd say from here to here.
Volume looks bullish.
Yep.
Yeah.
There's a volume B right there, starting at the top, but even this one.
Yep.
But the play that you want to play, look at this is probably a good example.
It's been choppy. That one was very choppy.
So there's one volume beat there. These ones didn't come close. Even this big red candle right here. This big red candle, when I see a big candle, I'm looking for the volume to spike above like one of these buyer beats.
Right.
If there isn't, I'm already assuming that the buyers are still in control. If I'm assuming the buyers are still in control, I'm expecting the 50 SMA to hold. And then look at, remember over here where you got stopped out, the 50 SMA was flat after the 10 SMA? Hold on, sorry.
The 50 SMA was
Where
down.
was it at? Is this one? Yeah, see how the 10? The 10
was
right here?
flat. Yeah, it was
The
flat.
10 was flat, and then the 50 was starting to get flat.
50. Yeah.
So then over here, look at this one. The 10 SMA is flat. Look at the 50. Strong.
Oh, okay.
Strong. Strong up.
Okay, I see.
Remember, in order for that to go bearish, you would want to see the 50 SMA starting to flatten out. You want to see it like this.
Or
Because
pointing
what,
down.
or pointing down, yes. Against you, right? But if you see it up like that, you're like, okay, I want to, if it breaks a 10, I know it's probably going to hold a 50, and then I'm getting in for confirmation up.
Gotcha. Okay. I think there's a couple more. Yeah, this one I missed. I wasn't at the screen, so I
Yeah,
missed
you
it,
got
but
the
it wasn't
cross
intentional.
right there.
Yeah.
No, that's fine. you want to be able to identify them for next time, right?
Yeah.
So you got the cross right there, and then you got the pullback high. That's the
Right.
pullback high. That's what I like to see. Two big bodies, a little body for the pullback high, and then identify right there. Boom. Get in. It breaks the 50, and one tick below that body, that pullback high body. Get in and ride it to the next level.
That's a lot of points, by the way. I know the
Yeah.
screen is small, but
No,
that's quite a bit of points. Yeah.
yeah, it's 13 points.
Yeah. So to have, I'm at 5 and 6. I think I did a mistake. I had it at 6 and 8 or something like this, but still, this would have been, it would have been closed.
Yep.
Okay. Go to the next one. So this was the last one before. So this one, it crossed up. The thing is, you had a cross down, then a cross up.
And that's where other indicators, next week we'll add other stuff to help you decipher that stuff so you don't get caught in those fake outs.
Yeah. So if you, this is just to show you that the cross, basically, so that where I put the limit. So when it crossed, I just put the limit.
Yep.
The buy. If you not go down, it will show the trade.
So you got the cross right there, and then you.
So I put the buy limit at the 50.
For
and
long?
Here it got for long, yeah. So here it got executed. So if you can see where the price is, this is where the cross is.
Yep.
And then it went down, and I caught it at that point. So
it crossed over here, right? Somewhere right
right.
here. And it came down. Now, did it play out?
Yeah. I think this one was filled. So it was
Yeah, see, so it created that pullback low or swing low, whatever you call it. Swing low right there.
yeah. So over here, I didn't know if I should keep it or stop it, but just kept it. It's on sim, right? So
Yeah. No,
So-
that's fine. But what you wanna do is catch that play and then let it play out and then write
Right.
down, okay, the moving averages look like this. They were stacked or whatever, volume looked like this.
Well, one of the things I looked at, Semper, is the previous low, so the one before this one, it was higher than the one before it. So I thought, it could be it's the trend is up, not down.
Yep.
Yeah.
You see higher lows, that's in your favor.
Yes,
see that?
exactly. So this is why I kind of kept it. I thought if it's gonna break that previous low, then I will worry about it.
Now is 5 points like is that gonna be your regular stop? 5 points?
No, I don't know what to put it yet. But I prefer not to keep it that's a lot.
No, I
quite a
know,
lot.
that's what I was gonna say. I was like, oh, you're gonna end up big
No,
red.
no.
That would have
No,
been $500 right there.
Exactly.
We'll once we perfect your entries, we'll worry about your stop loss on everybody next. We want to perfect your guys' entries first.
Exactly.
And then we're gonna worry about stop losses second. Then this is why I have you guys catching 4 to 5, 4 to 6 points, because that's gonna be our last thing. Remember, we want to worry about our entries, and then we want to worry about our risk first.
Right. Of
And then
course.
once we got that lasered in, we're gonna worry about your targets, which is the reward side of trading.
Right.
So yeah, this one you got the pullback low, even though you put a fishing order out. I mean, you entered over here though, huh?
Right.
It don't matter.
Yeah, I did.
I mean, you still want to practice getting in on this side of the trade over here.
Yes.
For it to go up, because you're gonna get more points. You're gonna concentrate or focus on catching more points, and that'll come later once we start working on that. But definitely, like this moving average, I wouldn't have it this low. I would either have it to previous structure which is either this or this. Well, you got in right there, so it wouldn't be that.
You talking about the stop loss or
Yeah,
the,
your stop loss. Your stop
yeah.
loss is look to your left. Is there any structure? The only big structure is this area right here.
That's what I would put it. Yes, the
So
below it.
either there, like
Yeah.
a tick or two below that, or if you have a cushion or a bigger buffer, then I would do it above below this moving average.
Okay.
1 or 2 ticks below that,
Okay.
and then let it ride.
Yeah.
Let it
It did
ride.
actually. It went up quite. I think it closed up properly.
Yep. You got in right there and it hit your target.
Yeah.
Except, okay, see this right here? Once it hits your first target, attach your second target, or no. Like once it hits your first target, put another target like up here, and then attach your stop loss to the 10 SMA.
Oh,
how-
I see.
See how the price action is really far from the 10?
Mhm.
What I usually do when it gets that far from the 10, I usually put my stop loss 2 to 4 ticks below the 10 SMA.
Okay.
So you can either do it at the 10 SMA, 1 tick below, 1 tick, whatever you want. It just depends
Okay.
how much you can tolerate. But see how you got out over here? You could have got out over here.
Correct.
So we'll work on that as well. But good trade on this one. But
Yeah.
try to be at the screen, seeing the candle develop towards your target or your entry.
Well, this candle was so strong and fast. Like I didn't anticipate it will go that badly, that fast, and you know,
Oh, what is this?
below.
Yeah, ES.
This is yes.
Yeah, yeah. Sometimes it'll happen, but no, you'll
I mean,
start to you'll start to see the improvement, and you'll start to get better. You'll be like, oh shit, this is actually starting
Yeah.
to come together.
Like I understand it will pull back because the green were very strong. I understand it will pull back, but not to break that long. Like it went really, really low.
Yeah,
So yeah. So this is why I just exited at the end.
awesome.
Yeah.
But yeah, for this week, your guys' homework is to develop some trading rules, or for your strategy, just so you guys can start creating those rules and start following the rules. And I recommend you guys, once you guys create them, print them out and have them in front of you, so you can just narrate. These rules are designed to help you narrate the chart, just like Brandon. What do I see? Okay, price action is too far from my 50 SMA, so I'm gonna just wait for it to, or the 10 SMA hasn't crossed the 50. I'm going to wait until I get the 50 cross. Okay, I got the 50 cross. What do I want to see next? Well, I want to see price action. What you're going to write down is the price action coming down to confirm the 50 SMA? Yes, it's coming down. And then the next question, does the 50, and then the next question can be, what does RSI look like? What does MACD? Not yet for you, Luna, but we'll add that in the next coming weeks. But for you, just concentrate on price action in the 1050 cross and the 50 confirmation.
Gotcha. Do you use the cross on other than the 50, or always the
I
50
do.
only?
I do.
Okay. Okay. So the rules will apply the same thing on the hundreds and if it goes to across the 200, etc. Or I'm just gonna ask him because sometimes the
No,
opportunity
like
comes.
there's a golden cross, right? There's a golden cross or the death cross. It's public. Everybody knows about it. The 100 and the 50. The 100, and when the 50 crosses above the 100 EMA, it's a golden cross, meaning
Okay.
that there's going to be a longer term continuation long. If you get the death cross, the 50 underneath the 100 EMA, then there's gonna be a longer, like a couple hours or a few, you know, more than a couple of minutes. There's gonna be continuation to the short side.
Okay.
But well, we can talk about that next time. I don't wanna start introducing all these crosses because you're gonna be like, oh, we got
Oh,
this
absolutely.
cross and we got this cross, and you're just gonna be confused, and I wanna slowly add that to your tool belt.
Perfect. Yeah, let's
Cool.
master the 1050 right now cross.
Yeah.
Then we'll worry about
Yep.
the others. But just was wondering if we only use one, or there's other.
No, like once you get the 1050 cross and you got that play right, you enter at the 50, and then you see the 50 crossing the 100, you're like, oh shit, it's gonna continue going. So it's either gonna help you stay in the trade longer, or it's gonna help you get out of the trade, or it's, you know, you either gonna help you get in the second trade. Be like, oh, okay, it's
Okay.
confirming the 50 again. The 50's over the 100 this time. I'm gonna get in so I can continue going along.
Okay, 50 above 100 EMA, it's confirming long, and
Yep.
if it's under, confirming short. Okay.
Sure. It's not confirming, it's
I
like
mean,
continuation.
Yeah. Yeah.
Yeah.
Okay. Not sure if there were any other ones. I think this were probably there's one the next day, the last one.
But yeah, thanks everybody for stopping by. Thanks for sharing your trades, Luna. Thanks for sharing your trades, Dell. Kelsey, we'll get you straightened out so you can start sharing your trades. Or you shared them in the beginning, but you have screenshots. And yeah, we're getting here. Third week. We're gonna start the fourth week next week. Get you guys up and going, hopefully with your rules. And start jumping in deeper into your guys' strategy. Thanks everybody for stopping by. Have a great weekend.
right.
Merry
You too.
Christmas.
Thank you so much.
Holidays.
Enjoy your
Thank you,
extended
too.
weekend.